To this midday market mood check on Moneycontrol. I'm Nandita Khemka. Well, when we look at the markets today, it's in fine fettle. We are gaining for a second day on the trot. The Nifty is edging towards that 18,700 mark. Well, what's aiding sentiment in today's session is, of course, the cooler than expected US CPI print that came out last night. We saw the US inflation coming in at 7.1% versus expectations of 7.3%. Well, that gives Fed some headroom to look at either pausing interest rate hikes or, in fact, even looking at a pivot later next year. Well, that's something that is aiding sentiment in today's session. Global cues were also pretty strong this morning as well. But when you look at individual counters, I think it's the ONGC and some of these oil and gas counters are doing pretty well. When you look at sectors, it's the Realty and Media Pack that's leading from the front. Well, let me introduce our guest today. Yatin is, of course, not there today, but we have Ajit Mishra of Religare joining in this afternoon. Afternoon, Ajit. Thanks a lot for joining in. Want to know your thoughts on the Nifty. Last week we were pretty much in the red for a large part of the trading session, but this time we've kind of snapped out of that losing streak, 2 straight days of gains. Where do you see the markets heading for the rest of the week?
Good afternoon, Nandita. So yes, Nandita, last week was more of a profit taking and markets were gradually inching lower, taking cues from the global counterparts. But now we are seeing things stabilizing both on domestic and global front. And as you've rightly mentioned that there was a data to support that move. And other important aspect is that throughout this correction, if we talk about the sector's performance, especially the banking, which is leading from the front, is helping the market to not only sustain image but also inch higher. So that is what we are seeing, that with the recovery in the US markets now we are seeing that the buoyancy have also returned in our markets, and we expect this trend to continue. There could be a breather in Nifty around 18,750 levels, but we there could be a day or two kind of consolidation that we might see around those levels. But broadly, the tone is likely to remain positive.
Well, you spoke about the PSU banking pack. It's seen a stellar run. In fact, even yesterday's session, it gained somewhere around 3% or so. When you look at some of these smaller PSU banks, they've been also hitting 52-week highs consistently. What's your view on some of these mid caps, which are PSU banks?
Oh yeah, that's right. Because the kind of move that we are seeing, especially in the PSU pack, it's almost like a vertical 90-degree kind of surge that we are seeing. Despite the overbought position, we are not seeing any kind of a pause or you know consolidation. So that clearly indicates that bulls are completely in control, and there could be a bit of consolidation because the PSU index have almost reached record highs after a prolonged period of underperformance. So there could be like a phase where we may see some consolidation. But some of these stocks from this basket, like Canara Bank, we have seen a strong base formation of rates. So we expect the Canara Bank also to join the move, wherein like in Bank of Baroda, SBI, they're already trading closer to the record highs. Other than that, like from the PSU pack, stock like Bank of India, we've already seen strong surge. There could be a breather. So it's more of like a very pick and choose kind of approach that one should maintain, especially in the PSU bank. We feel that the private banks are better placed, in comparison to the PSU banks, in case if the market has to rally from the current levels.
And since you spoke about private banks, I want to particularly talk about Yes Bank. That counter has gained somewhere around 30% in a matter of 4 sessions. Today, it's under pressure. What's your call on this stock?
So yeah, I can understand the kind of anxiety that people might have around this stock, because after losing for more than like 4 5 years, now we are seeing recovery, and that too with very strong volumes. So yes, we feel that in short term this momentum may continue in case if the stock manages to hold 20 levels, strongly. And in case if it's a short term trade, I would strongly recommend to maintain the stop losses also, because below 18 it would again may turn sideways. And in the case of sustainability, it can gradually inch toward 26 28 levels in weeks to come. But yeah, stay selective. And I feel that in a market like this, where we are seeing that Axis making a record highs, Indusand Bank witnessing decent traction, SDFC twins have started participating. The focus should be more on these big names, where we have clarity when it comes to the trend and other things also.
Right, I cannot not talk about Paytm. Well, it has announced buyback and at a premium of 50% to yesterday's close price. But then, ever since the buyback buzz came into play, we saw the stock rallying somewhere around 6% or thereabouts. But today, it seems that the market is disappointed with the buyback, given the fact that it is via the open market and not the tender route. How would you see this stock going forward, Paytm?
Samantha, yes, again, within this, new age basket, Paytm, every time we see any rebound, people start talking about it, and there's some news or the other which, keeps the stock in focus. So I still feel that, the trend is down, and especially if you are a trader, again, markets are at the record highs, you have better confidence to look at. Paytm is something that is not going to change the trend until we see a close above 600 level. So it's like still a lot of ground to cover. Uh, in the near future, they might continue to see a rebound every now and then. But in case if you are stuck, at the high levels, it's a opportunity to exit instead of looking for long trades or invest in the current levels.
Well, sell on exit, that's the call on Paytm. And 600, of course, there is a bit of ground to cover there. Let's also talk about the FMCG basket. That index has been under pressure over the last couple of days. HUL, Nestle are some of the counters that are under pressure. How would you view this basket going forward?
So in fact, Nanda, apart from banking, one sector which showed strength in between, while the other sectors was like backward, was FMCG and HUL, Colgate, Britannia. All these names have done pretty well. So now we are seeing bit of breather, especially in like HUL. I can say that it's a normal breather that we are seeing in the stock, and it should resume the trend soon. Colgate has definitely, reversed the entire gains that we've seen in the last three, four trading sessions. So that might, result in further consolidation in the stock. But broadly, within this basket, like ITC have also started, witnessing recovery. So HUL means Marico, ITC, Britannia. These are the names that one should keep on radar, and alongside with the UBL also, which looks very interesting on charts.
Right, these names looking interesting on the charts. My last question to you would be on the IT pack. It has seen a rebound after last week's drubbing. In fact, the IT index is on course to record its worst year since 2008. Given the fact that they have been battered quite a lot, do you think it's time to buy them on dips or is it time to exit?
In fact, of late we have recommended to our clients to start looking at IT pack, but the way we have seen dip after the breakout, because almost like after 11 months of corrective phase, we've seen a breakout in almost all the IT majors and the IT index as well. But with the news around HCL Tech, we started seeing profit taking coming in again. But I feel that the way now this sector is panning out, the ideal approach is to look for the safer bets. Means the IT majors they look comparatively better. Mid-cap ITs are definitely they are witnessing more volatile swings. So Infosys, TCS, they are the better bets, at least in case if the view is short term. And positionally, yes, you can look for stocks like persistent on dips, Birla soft on dips. But for the very short term perspectives, it's prudent to stick with the IT majors.
Right, prudent to stick to the IT majors. On that note, thanks a lot for joining in this afternoon, Ajit. Appreciate taking out your time and joining us this afternoon. Well, to our viewers, before I wrap up, just a reminder for our viewers that we are Money Control is having our MF Summit, Mutual Fund Summit later this evening. So catch the biggest conversations of the mutual fund industry with some of the most celebrated visionaries. Watch the live stream on Money Control, mfsummit.com, and also on Money Control social handles 4 p.m. onwards. So don't forget to tune in. That's it from me on this midday market check. Well, we will be getting you more news and updates on Money Control. So keep tuning into our website.